S&P 500 FC 7% Index. The gold standard of indices meets today's technology. What happens when innovative technology is applied to the iconic S&P 500? The S&P 500 FC 7% VTTCA 0.50% Decrement Index USDER, or S&P 500 FC 7% Index for short, seeks to provide optimized exposure to the S&P 500 using fast convergence technology, which was developed by and licensed from BofA Securities. The S&P 500 FC 7% Index combines FC technology with the robust trading ecosystem based on the S&P 500, adjusting its exposure to the iconic index multiple times a day. Compared with volatility-controlled indices that use traditional end-of-day methodologies, the index's intraday approach to rebalancing aims to provide more stability and limit exposure to large drawdowns. So how does it work? The S&P 500 FC 7% Index measures the S&P 500's realized volatility throughout the trading day and targets annualized volatility of 7%. When volatility is above the target, the index reduces exposure to the 500. When volatility is below the target, the index increases exposure to the 500, with a maximum leverage of 150%. This dynamic approach seeks to preserve the S&P 500's growth potential while allowing it to de-risk and re-risk multiple times a day. Back-tested data shows the S&P 500 7% FC index has historically demonstrated a realized volatility close to its 7% target, while outperforming an index using traditional end-of-day volatility targeting. By reacting faster to market moves, the index aims to systematically stabilize volatility while providing a foundation for S&P 500 index-based access to U.S. equities. To learn more about the S&P 500 FC 7% Index, visit www.spglobal.com/spdji.